Hi, all. I wanted to take us across the finish line from our session on Wednesday, it was. I didn't feel like I got everyone across the finish line. So I was thinking about that, and I'm going to make this video to do just that. So here I'm going to share my screen. I'm going to use that template that we had and giddy up. Let's have some fun. Okay, so I asked you to try and identify buckets that you wanted to use so that you could track records. And I went and renamed this bucket, the first one, into farm income. I did so by right-clicking on it, hitting rename, and typing farm income. I then went up here because it wasn't named that. I typed farm income. And so, and your urban, so I assume that there's not going to be livestock, but that could be a wrong assumption. I don't know about urban agriculture much at all. But assuming you might have crops like tomatoes, cucumbers, lettuce, a nice gentleman from FDA had put in, whoops, cucumbers is in the wrong place. Let me undo that one. You can see how I can undo and redo with these arrows up here. Cucumbers, lettuce. Peppers, often a good crop. So that would be if you went crop wise. We had spoken about instead of doing crops, some people might just do market channels. So there's that idea that you're not going to track your individual crops and revenues from them. You're just going to grow a whole array of things, and you're going to track how much you sell via market channel. So 32nd Street Farmers Market, City Hall Farmers Market, Farmers Market. Maybe you're going to look at restaurants, Joey's Restaurant, restaurant. Maybe you're going to have a community supported agriculture, which is a neat way of cash flowing. These are known as CSAs. Maybe you're going to sell, maybe you're going to sell to schools, and it's going to be Trinity School. So these are just ideas. So when is your money going to come in and how much? So that is a key challenge that I recognize all of you face. And it came up in the discussion in the chat the other day. So if I've never been a farm, how do I know how much I'm going to make? I made a bunch of calls yesterday, and that answer is just not readily available. There are resources on the Johnny's Selected Seeds website. They will give you marketable yield per area. So that might be one resource you go to. You might Google urban agriculture enterprise budgets. An enterprise budget could project revenue. You might look at enterprise budgets for tomatoes. And I would, if you're going to grow them indoors under those high tunnel or greenhouse, I'd look at greenhouse tomatoes or high tunnel tomatoes. If you're going to grow them outdoors, I'd Google it appropriately that way. Penn State has really good enterprise budgets. Cornell has good enterprise budgets. Maryland has good enterprise budgets. So those are some places you could find enterprise budgets. And of course, that's the Northeast. That's what I know. So I'm sure that they exist out. I bet UC Davis has really good enterprise budgets. So that'll give you an idea. And that's it as an idea. In terms of farmers markets, one of the things you could do is talk to the farmer market managers and say, what are your produce vendors or whatever commodity you're selling? What do they make on average on a week? And it could give you a starting place. And that's all it's going to be, is a starting place. But I know that for my tomatoes, I can expect 10 pounds per plant of marketable fruit. So I grow more than 10 pounds per plant, but marketable fruit. So I could create an equation. I can hit plus in my spreadsheet. And I'm going to say 10 pounds per plant. I have 55 plants. And so that will give me marketable fruit, 550 pounds. I then, how much will I sell it for? I can get 225 from my markets. I don't know that you can get that. So now I have these pounds times this So that's about $1,237. I'm going to get that $1,200. I'm going to start selling in July and go through October. July, August, September, October, 4 months. I can take that, I divide it by 4, and now I have $309 per month. So what do we say? This is where my tomatoes go. 309, 309, 309. And I could have just dragged this across. Take that there, boom, 309. Okay. So this is telling me when the cash is going to come into my farm, which is key. It's called cash flow, but that's really helpful. And it's going to give me an estimate. Lettuce, I was making about $100 a week, which is $400 a month. 400, 400, 400, 400, 400. I was on my farm. Cucumbers, again, was a July crop. I wasn't really making much, 50, 50, 50, 50. Again, you can get your own estimates, right? So let's say that the farmer's market, that you go to the market manager, and they say, well, vendors, they're doing $400 to $600 a week. Some are doing 1,000. You can say, okay, maybe I'm going to be conservative. Maybe I'm going to start out with 400 a week. So, there's 4 weeks in a month. So you're going to have 1,600. And your markets are going to start, where is that going to be here? Your markets are going to start in May, 1,600. Here's what I meant where you could drag this right across and say they go through September. Okay, your city hall farmers market, you're going to say the same thing. Whoops. So you have that there. And so again, this is just ways of populating this. Joey's restaurant, say they're going to give you 100 a week. And so that's 400 a month. And that's really going to start in June. And that's going to go through October. Fair enough, right? Your community supported agriculture. So money might actually come in the off season, which is wonderful, right? For cash flow purposes. So you might actually be able to say, okay, I'm selling $400 shares and I'm going to be able to have 4 shares. It's $4,000. And so, I'm going to get 2 people giving me their shares in January, another 1 in February, and then the rest are going to come in. And so what is that? That was 2, 3. And I said I'm selling 10 shares. So 7 times 4 is 2,800. The rest is coming in April. Okay. And Trinity School, let's say that, they're going to buy from me $100 a month for the 2 months that school remains in. That's ways that you can go about populating this. Okay. So then we have this miscellaneous income. So again, this is income that the farm is not producing. It's coming from other sources. And so this could be spouse's office job. As we spoke about, this can be a point of conflict in relationships. So don't make any assumptions here, have the conversations. How much of this income is your spouse, are you and your spouse together determining can go towards this farm operation? So let's say that your spouse is very generous and says, okay, I'll give you $500 a month in January, 500 in February, 500 in March, and a bonus round for Christmas in December, and that's it. And let's say that you're asked to do some speaking because you're going to tell other veteran farmers how to get up and going and how and about your success. So you get speaking fees. Let's say you get $200 for a gig in January, you do 2 gigs in February for 400. That's the type of thing that goes here. Okay. Let's say you ran all the way down and you just ran out of room because you have all this miscellaneous income. The way to add another line is hitting this button. So you need 2 more, you'd hit that button. That's the idea there. Let's say you didn't like the word miscellaneous income and you want to name it other income. So we're going to go down, right click on that, rename. I'm going to go up here and I'm going to rename this other income. Perfect. Okay. So the planned profit, Remember what we said the planned profit was, it's treated as an expense. You have a family budget, and let's say your family budget said your farm needed $10,000 a year to support your family. And you have May, June, July, August, September, October. You have 7 months that you can charge that farm for that, because it's going to be hard to pay you in the off months. So maybe you're going to charge the farm $1,428 in each of those months, right? 1428. And I can again take this and drag it. And there, our math must have been wrong. 6. It was wrong. Apparently we allowed the farm to charge in April. There we go. Almost 10,000. I want to take a pause here though. Hopefully when you start up your farm, you don't need to take any money out of your farm for the first 3 years. It's going to be highly improbable that you're going to take anything appreciable out of your farm in that time span. We also spoke on Tuesday about profit margins. So we're seeing 3 to 7% on average. We're seeing, you might say, some, if you really expand that farm to all different commodities, in our studies, maybe 10% profit margin. Some farms certainly are in the 20% range, but they're the exceptions and they're really the outliers. So if you're looking at a 10% profit margin and you want $10,000, that means you're going to sell $100,000 worth of product. That's a lot of sales. So I just want to give you a pause there as to what it really is practical to take it out. But in this planned profit, that's really what we're saying. This is the amount of money that you're going to put into your pocket. So we spoke about the other buckets we could use for expenses. And we said, well, let's just keep it simple. Let's go with direct expenses. And this word should be actual, and overhead. Because direct expenses and overhead still lets us do some analysis and still lets us ask the real pivotal question. Can my sales cover just the simple costs, the direct costs of producing my product? No overhead included on that. If it can't, here's where you're watching Oprah. Because you already know that not only can you not cover any of your overhead, your taxes, general repairs, insurance, rental fees, all those things. You can't even cover your fertilizer and seeds. But so here's where this will be easier to project than your revenue, I think, because you can go and say, how much seed am I going to have to buy? Maybe you're going to buy in plants. Maybe you're going to buy in fertilizer. Maybe you're going to buy in compost. Maybe you're going to buy in hand tools. Maybe you're going to buy in supplies. People dump a lot in supplies. The more that you dump in supplies, the less precise you're going to be able to actually track your expenses on your farm. So, but supplies is a good catch-all for, your twine for trellising your crops and your clips for trellising your crops, and just the various sundry things that you have. And so what else do we have here that we could put in? Here you could put in soil tests. Depends on how big you're going to put that. So these are the costs that you can ask yourself, what do I put in here? Costs that change with my level of production would be the variable costs, and they often go in these direct expenses. So if you grow 50 tomato plants, or if you grow 150 tomato plants, this number is going to obviously change, right? And so if you fertilize, a 50 by 100 area of land, if you fertilize an acre, that number is going to change. So that's the idea that you could put here. You could put these hand tools actually probably into overhead, because because it's really not going to change all that much with the area, but I dumped it right into direct operating. Even if you're not fully accurate as to what bucket it goes in, it's still going to be okay. So maybe we'll take hand tools out and we'll put that into our overhead costs. So, okay. When are you going to expense this? So we looked at pre-buys before and we thought, well, we're going to buy our seeds and to get a discount on that. We're going to buy our plants to get a discount before year end. We're going to buy our fertilizer to get a discount at year end. We're going to buy our compost to get a discount at year end. Supplies, we might be buying, packaging and things to that effect. I'll put packaging to fill this space in. Maybe packaging is going to go in the January and February months. Supplies might be 300, 300, 300, and it might actually just go pretty uniformly throughout. But maybe come June, I'm going to need a lot more supplies, and July, and then maybe I'm good, and so I'm not going to buy anything the rest of the year. I don't know. Soil tests, you're probably going to do your soil testing, when the ground thaws. So maybe that's going to be May. Maybe it's just going to be $50, and you're going to do it once. That's the idea here. So what goes into overhead? So overhead, there's a concept. I'm not going to put depreciation here. I'm going to go more with the equipment. Overhead, taxes are your overhead. General repairs are your overhead. Insurance, interest on loans are your overhead. Rent, as we said, would go onto your overhead. If you're renting land, farmers market fees, likely to go on your overhead. Any licenses, and so if you're organically certified, things to that effect, licenses and registration. So maybe you need a pesticide license, things to that effect. Notice how I hit this button to add more. So those are the things that would go on your overhead. So for us, taxes are due in New Hampshire in June and November often. So I don't know what you're going to put for your taxes. Maybe it's going to be $1,500 and maybe another $1,500. Really depends on the size of your land. Repairs, when they happen, there's a charge. And again, these enterprise budgets will at least give you a starting point for that, right? And so your insurance, again, you're going to have insurance. My insurance is due in April, and I can get a really nice insurance policy for my farm. That's about $1,200. And so for my farm package, so I pay that in April. So again, when things are due, that's when you're going to look at that. So closing this out, equipment, there's this concept of depreciation. So it's going to be the annual amount that you're going to pay towards your equipment. So let's say that I bought a mower for $3,000. It's a 7-year piece of equipment. Let's say it's going to have a 7-year lifespan. And so I'm going to take, I'm going to just do the equation for you. Again, plus helps me do an equation. It's 3,000 divided by the 7. And that's going to give me this $420 that I have to pay for my mower each year. Another way of looking at this concept of depreciation is you buy this piece of equipment. When do you want the business to pay that back, to be able to recover the expense for that? IRS has guidelines as to what you can do with that 5-year, 7-year, 15-year pieces of equipment. For example, a high tunnel is a 15-year asset often for IRS, but so this would come out to $428. I'm dragging this all the way across. Boom. There. Oh, I said it was a 7-year. That's $428 a month. My bad. It's $85 if I look at it divided by a year. Okay, that's more like it. Okay, so something actually went wrong with that. I said I was going to pay that off. Oh, that's what I said. Okay, let me walk you through what I did here. So I have 428 I have to pay in a year. I know that I don't cash flow though until I don't have income coming in from the farm until May through October. So those are my 5 months, right? May, June, July, August, September, October, 6 months. So I'm going to take this 428, I'm going to divide it by 6 months because that's when I have cash coming in. And I am going to say $71 May through October. And there is or how I get to that. Andy said that a BCS walk behind was about $1,500. Again, I'm going to go, and that has, we're going to say it lives 5 years. It's $300. I'm going to do those same 5 months. So that's $60 per month. So that's how this spreadsheet is used. Oh, I'm sorry. That's how the spreadsheet is used. Here's what I'd love for you to closing for your equipment. On another spreadsheet or on a book or on a piece of paper, I'd love for you to be able to take the make of your equipment, each piece, the model, the year of the piece of equipment, how much you paid for it, and what year you bought it. Those 5 things. Make, Kubota, model, BX 2020, year, 2015, amount I paid for it, $15,000, and the year I bought it, 2019. And if you kept all that, that'd be a super benefit for the ag service providers to help you with. So I hope this helped, and we'll talk to you soon. Well, probably won't talk to you soon, but good luck, and be well.